Hey guys, in this video, I'll explain how you can invest at different income levels and different stages in life. I'm Jai Ko, property investor, mortgage broker, and founder of JD Capital. For the purposes of this video, I will categorize 3 different income levels: sub 100K, $100,000 to $180,000, and $190K and above. I have personally grown through each level, and this will give you insights into what you can expect. People think that property investing is only for the rich and high income earners, but it's definitely not true. When I bought my first property, I was a PAYG employee straight out of university, and I was still living with my parents. So it was and is definitely possible. My income at the time was around $70,000 back in 2013. Like most people in their early 20s, I did not know or where and how to start. So let's break down a belief that many people have. Property investing is only for high income earners, but it's definitely not. Yes, high income earners do have advantages and they can move faster, but that does not mean people earning less cannot get started. So as you watch this video, I want you to be realistic and assess where you are in life right now. So grab a pen, grab a paper, write down your income, list your monthly expenses, and work out how much surplus income can you actually save. Get the basics right before you even start investing, and understand your personal cash flow and budget. Because if you cannot get this right, how will you even manage more money when you invest hundreds of thousands of dollars? As a mortgage broker, I have worked with clients from many different walks of life. They all share one goal though, to build freedom. So let's go through the tips and strategies I personally give my clients based on their income level. So let's start with the entry level. This is where I started. I was earning roughly $70,000 when I purchased my first property for $428,000. At this income level, budgets are tight and you feel poor. Every dollar you can save makes a difference. And I remember my career goal at the time was to hit 100K, which seemed like a really good income. However, today, 200K feels like the new 100K with how fast inflation is rising. So here are my tips for anyone earning sub $100,000. Focus on growing your income, as your borrowing capacity at this stage is still somewhat limited. So you really need to focus on reducing and eliminating expenses, subscriptions, and bad debt that's holding back your cash flow. This can also include things like car loans and credit cards. I unfortunately made a bad move with taking on car loan and novated leases, but it taught me good money lessons, so don't make my mistake. Moving back home can also help reduce living costs and allow you to build savings and buffers quickly. But if moving back home is not an option, consider room sharing or having a flatmate to split the rent. Remember, your biggest asset at this stage is you. So at the entry level, investing in your skills can lead to a higher income and ultimately higher borrowing power. So ask for salary reviews, pursue promotions, or find ways to earn additional income. I was personally doing whatever I can to study more, get certifications in digital marketing to position myself to get promotions every 1 to 2 years. This stage is about preparation. If your current income and budget cannot comfortably support you to buy a property, it is better to pause until your cash flow and income is more stable. Next, the mid-income earners are those earning between $100,000 and $180,000 per year. At this level, you feel like you're making good money on paper. The tax rates are starting to increase and after-tax income is also getting higher. That extra income isn't significantly going to change your life, but borrowing capacity will be stronger at this level. But the key is to try not to increase your expenses at the same rate as your income. If you can park away more surplus cash from your pay rise, then you will save more and ultimately be able to build up a faster deposit for that investment. You may be renting or own your first home as a PPR at this stage, so you want to do what you can to lower those until you build up more assets. And also, don't get too comfortable at this stage. Don't forget about the good habits that you built early on, because the earlier you invest in assets now will help you fast track your investment portfolio. If you still don't have sufficient savings for a deposit, you may also want to consider investing in shares or ETFs because it's easy entry price, right? Until you have a larger deposit for a property. Alternatively, because your borrowing capacity is now stronger, you can consider using your parents' property as a guarantor to leverage 100% if your borrowing capacity allows you to. Last level is the high income earners who are earning above 190,000. At this level, your borrowing capacity is strong. Alright, but however, interestingly, I see a lot more financially irresponsible people at this level because they live paycheck to paycheck. And I also see commonly lifestyle inflation start to creep up, buying luxury items, taking out car loans, upgrading their cars, flying business class, etc. High income earners have one common enemy. It's high taxes. So you really need to invest to take advantage of leverage and negative gearing. If you are PAYG, you will need to look for strategies to maximize negative gearing benefits like leveraging equity from existing properties. If you're self-employed, you may want to consider transitioning from sole trader to a company structure because companies have a flat tax rate of 25% tax. You may also own a investment property or a PPO at this level. So make sure you structure your loans correctly to maximize negative gearing benefit and also utilize debt recycling strategies to maximize tax deductibility because every dollar you get back in your pocket is financially better off for you. One big advantage at this level is buying back your time with money. I personally outsource a lot of things like buying pre-packaged meals, cleaning. Even though it costs more than groceries and cooking at home, it allowed me to spend more time at work so I can increase my income trajectory. So have a look at what is draining your time and outsource it so you can spend more time on things that make you more money. Even when I was earning above $200,000 of income, I kept my living expenses low and I invested the majority of my post-tax income. Sometimes sacrificing early on will allow you to take 5 steps forward. And I'm not saying not to enjoy life, but to be conscious of what you are spending your money on. Even a few short years of sacrifice will pay dividends in the next couple of decades. So no matter how much you earn, always leave room for savings and emergency fund. You've probably heard this many times, but it remains true. Live below your means. If you're on an entry-level income, it's easy to think high income earners are more financially free, but you might be surprised. Not all high earners are financially savvy and actually able to save. Earning more does come with advantages, like greater flexibility and more options, but in the end, it all comes down to good financial habits and how much you keep and invest. I hope you found this video helpful. Happy investing, and I'll see you on the next video.